we don't know exactly what's going to happen, but we do know that the prices are starting to fade. There was a headline that I read recently that said something like, builders are slashing prices to sell houses in quickly cooling markets. And that I think one of the statistics was that in Phoenix, 22% of the new listings between early May and early June had the price cut. So we're beginning to see some cracks in the housing market in the U.S. So I don't know if it's going to be like '08, probably not like '08, because we do have a housing shortage, but we're going to definitely see prices stop rising in the housing area. Besides that, what we're also seeing is that new homes aren't selling as fast. I think in Dallas, the inventory of houses under construction is twice the normal level, which means that GDP is going to be impacted because new home construction is a big part of GDP. So I think that housing is going to cool. I can't say it's going to crash, but I think definitely it's going to cool. But beginning in July, I think we're going to see big down spikes in inflation. And why do I say that? Well, all of the commodity prices have been falling. For example, I had some somewhere. Wheat is down like 30%, copper's down like 50%, and even gasoline is down 15%. Now, as Josh mentioned, gasoline's an issue because refining capacity isn't there. And refining capacity isn't there because the refiners have to make an investment in refining, and to build one of those is a fortune. And
right.
They need 20 or 30 years of business to pay for it. And they don't quite see 20 to 30 years of rising demand because of the move to electric vehicles.
Right.
So it's a current issue. There's not enough capacity. So gasoline is likely to remain elevated. But the rest of the stuff is falling. And consumers are changing their habits. They're not buying as much food, even at the grocery stores. They're not going out to dine as much. They're not staying at hotels. Now, when I say they're not, these are marginal changes to the downside that we're just seeing now. When do we know when to put money back into risk assets? The answer has always been when the Fed changes policy. Well, what exactly does that mean? Do they have to get loose again? And the answer to that is no. It's when they tweak it. So it's, in mathematical terms, it's called the second change or the derivative. So here's an example. If at the July meeting, where they're expected to go 75 basis points, they only go 50 because now some of their 400 economists see what we see, and that is a slowing economy and trouble ahead, and they only go 50. The market was expecting 75. That will be a signal to the stock market that and to the bond market that they're going to start to ease as the recession comes. And that's the signal to get in.
One thing you have to look at is that COVID created a behavioral shift in consuming. The fact that the government was giving out money left and right, you kind of created a consumer boom there. And again, right. the behavioral effect was from brick and mortar to on-site retail, web purchases, right?
Right.
Mainly the web goods come from China. So you had this massive amount of goods trying to go through our ports during that period of time, and the ports got clogged. Now, as we shift and go back to brick and mortar a little bit, as there's that behavioral, now it won't completely shift back, but some of it will. And that should solve some of the ports. problems, issues there. That's supply side. There's a funny economic saying, and you've heard me say this before, Brian, but what's the cure for higher prices? And the answer to that is higher prices.
Right.
And so, again, you're seeing that too. So as inflation kicked up, the higher prices have now entrenched some spending. And so people just aren't, when I look at even the 4th of July this weekend seemed much quieter than it had in past years, as what I believe is people just stayed home and barbecued in the backyard versus taking a trip where, it was going to cost them $500 in petrol. So you're seeing a lot of entrenchment in that term, in terms of purchases. That helps the supply side too. So as that occurs, and again, there's port expansions and everything else going on, so that when we go back, as we keep on buying more and more stuff on the internet, they're able to handle it. Again, supply chains take time to fix. It's not something that you can fix overnight. The problem with our society is that patience doesn't exist. Patience is waiting 2 seconds for that tweet to hit your box, and then the truth comes out.